Bitcoin touched 50K and I'm in Barcelona a few days. Beautiful city. The first days we stayed there. Amazing views, but internet was absolutely garbage. And we can't have that when Bitcoin is pumping, can we? I also visited a friend who had bought a legendary castle up on that hill, overlooking the entire Barcelona. Only in tech those things can happen. And that's why we are here, studying technology, studying tech invest, looking at the Bitcoin chart. This past period has been another victory for simplicity over complexity. In October, we had an inverse head and shoulders, which confirmed, together with Larsen line back to gold, textbook perfect at 27-28K, and boom, 50K. All the drama with ETFs and sell the news and grayscale didn't matter. Larsen line stayed gold the entire time. And in fact, we got another clue, another inverse head and shoulders here that confirmed at 43,500 and boom, 50K. And before that, we had this bigger inverse head and shoulders that confirmed at 25K. And before that, Larsen line flipping gold at 21K. And before that, the technical volume nodes, the POC, point of control, which we identified in January 2023 at 17,433, I think it was. Everyone complaining here that this was too late, lagging indicator. Ha, we smashed it. It's another victory for simplicity. It's another victory for technical analysis. It is another victory for Larsen line. It's another victory for education, for methodology, for shielding yourself from the noise and focus back on the chart, on price, because what the big players are actually doing can be uncovered in the charts. If you've stayed on the sidelines with the Larsen line process with my course, I seriously don't know how much more evidence you need before you go and invest in yourself. Just don't get scammed, guys. It's ctolarsen.com, nothing else. Everything else is a scam. Okay, so now price hit 50K. What now? Some resistance here at 50K must be expected. Even number, halfway to 100K and so on. But the situation we've had since the beginning of 2023 here has not changed. The trend is still up. Larsen line is still gold. All technical analysis here is still bullish. And to clarify, that is a mathematical fact. It is not my opinion. I just translate what it says here on the screen into English words with a funny accent. TA, technical analysis, doesn't predict the future. It only sometimes presents favorable risk-reward setups. So the reason we wrote "don't celebrate yet" is because, based on TA, this run might not be over yet. At some point it will end for this time. The trend will turn down. That's what the whole Larsen line process is about. But it hasn't ended today, even though BTC will probably face resistance here and is retracing a little bit right now. And if you did enter around here because you had taken this step, you don't celebrate when your trade is still in play. From here onwards, for the analysis that I humbly offer you here on this YouTube channel, I will stick exactly to the same metrics as the past period. And those are, in order of impact: number 1, trend, Larsen line. Number 2, chart construction, technical analysis. Number 3, yield. The 2-year yield hasn't broken down yet. Support held. It's pumping today. That's probably why BTC is retracing right now. The breakdown hasn't come yet, meaning that is still ahead. And number 4, the trend in GBTC outflows. Is it accelerating or slowing down? After the initial acceleration, it started slowing down. This is a trend we can monitor. Okay, now over to something completely different. Ethereum. If we look at the USD chart, during this recent period, look how messy it looks. What is actually going on here? But look how beautiful it becomes if we switch to the Ethereum to BTC chart, eliminating the speculative price versus USD. So clear support and resistance levels we get out of this. I was very disappointed that this breakout failed, but it is still possible that this is a bottom building here, a rectangle bottom in ETH BTC. Now there is a lot of talk about an Ethereum ETF, and if that happens, Ethereum has 3 giant advantages over BTC for traditional investors like pension funds and so on. Number 1, ESG compliance. I made so many videos explaining why it's a technical misunderstanding to call Bitcoin mining bad for the environment. In short, because you can't move that electricity somewhere else. And Bitcoin mining is one of the few data center activities which isn't dependent on latency. While that won't matter, because their analysis will end at, yeah, BTC mining uses a lot of electricity, so bad. But Ethereum proof of stake doesn't. Number 2, yield. You get yield for staking Ethereum, while you don't get yield from holding Bitcoin. And number 3, Ethereum is more harmless. The main use case of Ethereum, smart contracts, doesn't try to be another kind of money or something which many feel threatened by. It's a blockchain utility platform, first and foremost, so easier to say yes to, I think. Let's see. We who are looking at this from a technical perspective, Ethereum layer 1 does seem a little bit slow and expensive and a little bit dated when comparing to the speed and cost of, for example, Solana. So I do also think it's important to be vigilant here in case this rectangle breaks on the downside with a trend down, which it did here one time already, though it recovered. But that doesn't mean it can't break again, and it's in fact a bigger shift in the power base of smart contract platforms underway. But if this base seems to hold, a rectangle can be a powerful bottom or reversal pattern in technical analysis. So this could still become the cyclic bottom in ETH versus BTC. Thank you, tack. City och Lars now.